Hey guys, welcome back to my channel. Today I'm going to talk about credit rating. As many of you send me emails and they ask me about how to be successful and how to start your life, and you're very young and you don't know what to do. Now, one thing that people don't understand and completely ignore is your credit rating when you're young. It's very important to build a good credit rating as you're going through life, so when the time comes you can get a good mortgage, you can get a car, you can get all the relevant things. These days, even jobs, they run a credit search to see how good your credit rating is. Now, what is credit rating? Credit rating is just a way that has been created by the financial services and the financial industry to work out how credible you are. So for example, if you have a friend and they ask you to loan them some money, you're more likely to loan them some money rather than some random stranger who walks up to your door because you don't know if you're going to get the money back. So same goes for financial institutions. They want to know how good of a person you are. How much money do you borrow? What frequency? Do you return the money in time? Do you fail to make payments? So all of that is recorded with the credit reference agencies. Every time you make a bill payment, every time you fail to make a bill payment, so your credit cards, your water, electricity, mobile phone, I don't know, anything, all the bills, they're all with the credit reference agencies against your name. So it's very important as a young person to understand that you need to live within or below your means, because if you spend too much money and you can't make the payments, you're damaging your credit rating, which will impact you in the future. Now, as we all know, that about 3 to 5% of the world's population is really wealthy. The rest of the world believes that they have money, but they don't really, because the rest of us just borrow money from banks and we get the things that we need and we believe we have made it. In reality, we're just borrowing money from the rich people to live our lives and paying interest to them. And I say rich people, it's a very blurred line these days, because middle class and even working class people invest and put their money in banks, and so the bank is the intermediary, the middleman who takes the money from the investors and then lends it out to those who don't have money, and those who don't have money then need to prove that they are worthy of the loan. They're good friends. So for example, if you buy a mobile phone because you saw an advert on the latest social media platform or on TV that the new phone is out, you can't afford it, you bought it, and then you fail to make payments, and whether you continued later on or not, that damaged your credit rating. Initially they thought, okay, yes, we think you're a good, worthy person, we give you a phone, let's say it's worth £500, and you'll pay £50 a month. 2 months you didn't make the payment. Now there's a mark against your name saying that this person said that he could borrow £500, but he couldn't really afford to pay back in time, therefore there's a marker. So these kind of things impact you in the long run. It's very important as a young person to know that when you are borrowing money, you have the ability to pay it back. Like I said before, most of us believe that we have money, but we don't. Unless you have paid off all your debts, your mortgage, your car payments, everything, and you have, let's say your net worth is £500,000, and you have another £500,000 in the bank, cash, then you can say, yes, you're kind of rich. You're not super rich, you're not super wealthy, but you are sorted in a way, because most of us believe that we are rich or we are wealthy because of the things we have, rather than what is our net worth. So you really need to understand your net worth, and then you need to be able to sustain that. So you need to have at least half or the same amount in some investment or in some cash somewhere that allows you to maintain that lifestyle. A house will require insurance, it will require upkeep, paying the bills, maintenance, all of that. So you have to consider all of these things. So starting in life, it's very important to understand where you want to be in 5 to 10 years' time and what kind of a job you're looking for, what kind of future career prospects you expect to have, because all of your actions today are going to impact what you do in future. You might think that blowing away money in clubs and bars, partying away or buying gadgets or clothes is just here and now. It's great, but as long as you're not borrowing money to have that lifestyle, and if you're borrowing money, you need to be aware that you should be able to pay it back regularly. If you don't, your credit rating is damaged. In the long run, it will impact your jobs, because most companies these days check if you have a good credit rating, especially if you're working for a bank or any other financial institution, which includes insurance companies and things like that. So yeah, hope you like this little video. I'm going to keep making more and more of these, so please keep sending me emails, comment below, let me know what you're interested in hearing, and I'll make more videos like this. Thanks for watching.